Segregation of duties is really key. So there's 3 different areas that you should have separated. So the custody of said check, the authorization, who's gonna sign it, and then the record keeping, your AP clerk. Those should all be separate people, because if I have the ability to commit the fraud and then conceal the fraud and nobody's looking, I'm gonna get away with it.
Hello, and welcome to another episode of It Depends, a podcast series brought to you by Hantzmon Wiebel. You know that if you've ever talked to an accountant, they've told you, well, it depends. This podcast series is for business owners, leaders, operators, accountants, or someone just wanting to learn more about the accounting industry. I'm your host, Clarissa Hoffman. On this episode of It Depends, we're joined by Vanessa Mullins. To give us some insights about fraud prevention, Vanessa is a staff accountant in our accounting and auditing department. Thanks for joining us, Vanessa.
Thanks for having me, Clarissa.
Can you tell us a little bit about your background?
Sure. I got my associate's degree a few years ago and started with Hantzmon Wiebel in the small business accounting department. And then I got my bachelor's degree in fraud and forensic accounting. And so then after that, I moved to the auditing department.
Well, you're the perfect person to be talking to us about fraud today.
Good.
All right, let's jump right in. So what are some common myths about fraud?
Some common myths are that frauds only happen in big organizations. So, mom and pop businesses, they think that it wouldn't happen to them. Maybe they feel like they don't have enough cash on hand for anybody to steal. Another myth is that they think, business owners think that the people that they hire would never steal from them. They make their best judgments about hiring, and so they feel like they could spot a fraudster during the interview, and that's not necessarily the case.
Especially when people have been there for so long, they think, oh, they're like family. They'd never do that to me.
Yeah, that's actually one of the other myths is, someone saying, our bookkeeper has been here for, 20 years. That's actually the one that you want to look into, right? Because normally it's the person that has the most authority, that is has no oversight. There's nobody checking after them, and they're able to do everything from payroll to cutting checks to concealing the fraud. And then also another myth is that a lot of organizations think that if they get audited, an external audit, that the audit will find the fraud. But an audit is not made to find fraud. Now, you might find it in there, but it's not made to find fraud. So that is not true. The external audit will not find it.
Yeah, that's a great point to make, because I think that's a common misperception about, what an audit is actually designed to do.
Absolutely.
So can you provide us a few examples of fraud that we've actually found within our clients?
Sure. Most recently, there was an office manager who within 18 months had given herself 7 raises. She had also been paying off a 401k loan with the business's funds. It wasn't coming out of her paycheck. So she wasn't actually having the funds withdrawn and then the business remitting the payment. She was just remitting the payment on the company's behalf. So that was another $16,000. She had also set up an Amazon account using the company's credit card. So she was running a lot of personal charges through. That was a very local story. There was another payroll clerk when employees would get hired. Say it's their last day and it's their last paycheck. This payroll clerk would make another check, make it look like it was that person's final check, take out some tax withholding, and then they would change the routing and account number to their own. So it was actually getting routed to them. And really nobody pays attention to an employee that's no longer gone. So that's a way to hide that fraud. There's another case that was local. There was a payroll clerk, and when an employee had their last payroll, she would copy that paycheck, take out some tax withholdings, and then change the routing and account number that check was going to. So not only was that employee getting, their last paycheck, but the payroll clerk was getting an extra check also every time. And the way that was discovered was through an audit, actually, showing, where we looked to see if routing and account numbers were the same for different employees, and that's when it came up. That's when it was found.
Great.
Another case that we had was cash wasn't being deposited. No cash at all was ever being deposited. And the business owner wasn't really paying that much attention to it. So all of the cash payments that were coming in, that clerk was pocketing all of it, which is a case of skimming.
Well, that's a great segue into my next question for you. Can you describe a few common methods of committing fraud?
Sure. So there's stealing cash, skimming. If I take cash before it's hit the company's books, no one will ever know. So there's not really a way to track that cash if it never got into the system. So you have that. Then you also have fraudulent disbursements, which from the banking sector, this has become a lot more popular post-COVID. So fraudulent disbursements could be where I'm the AP clerk and I make a check and I print it out. I have the appropriate people sign it. And then after they're done with it, I white out the name and put my name, and then I go and I cash it. So up until I did that, everybody thought all the processes and procedures were working the way that they were supposed to. And the check was going to go out to the right vendor. But afterwards, I edited that and took it. Another common method is billing schemes. Billing schemes will happen. Let's say you have a fraudster, maybe works in AP for the company, and there's a vendor that they know personally, and so they say, hey, I'll mark up this invoice if you can give me a cut of that, right? So the money is coming from the business, but you're using the outside vendor to make that, you're colluding with them to make that fraud happen.
Yeah, so in that case, it's not just your employees that you have to worry about.
Right. Depending on what type of inventory that you have, it could be harder to steal, right? A car dealership is going to be harder to steal a whole car than it would be a chip manufacturer. But inventory is always something that can be stolen.
Well, you just gave us some examples that tie right back into these common methods that you provided. So what are some procedures that can be implemented to prevent fraud, or, you can't always prevent it, but aid in the detection of fraud?
So you always want to be a step ahead. So you always want to make sure that you are reviewing any bank statements every month, canceled checks, voided checks. You want to make sure that you're checking payroll before it's being released, or at the least afterwards. Segregation of duties is really key. So there's 3 different areas that you should have separated. So the custody of said check, the authorization, who's going to sign it, and then the record keeping, your AP clerk. Those should all be separate people, because if I have the ability to commit the fraud and then conceal the fraud and nobody's looking, I'm gonna get away with it.
Right, and segregation of duties is so hard for a lot of our clients, just given the size of their businesses. But that's where that, the first point that you made about, looking at documentation and doing those reviews is really important.
It is. And maybe it doesn't seem like it right away, but the 2024 report to the nations reported that the average fraud is happening for 18 months before it's found. So you could be looking and find that this fraud has been happening for a long time.
Any other procedures to prevent or detect fraud?
Sure, we can review vendor invoices, make sure that those have maybe dual signatures over a certain amount. We want to be looking at background checks is really important. And this is kind of a kicker, because some of the cases that we've seen in Charlottesville, they didn't press charges. And so that person, that fraudster, is out here and they have to find another job, right? So they're gonna go work for somebody else that's probably in this community too. And so that's kind of like a two-sided thing. You have to press charges in order for it to come up on a background check so that the next place doesn't hire them. But if you don't press charges, nobody's going to know to be aware of this person. So it's really important to vet your employees. I'm very familiar with QuickBooks. QuickBooks has an audit trail. It will show you the original transaction, the time, the date, down to the seconds. It'll show you exactly what was changed. And so that's something that business owners should add into their monthly reviews to make sure that maybe after they reviewed last month's, your fraudster went in and changed some information. So you could always use that audit trail to go back and look and see what's happening. Is anything changing from the first time that I reviewed these?
And maybe the business owner or the manager isn't comfortable with doing that themselves, but that's certainly something that they could give us access to their QuickBooks, and we could run that report during their audit if they requested.
Yeah, absolutely.
If they had any concerns.
Absolutely.
What about, we frequently refer to it as tone at the top, the example that management or the owner sets.
Tone at the top goes a long way. So not just for professionalism with your senior management, but for your employees too. So if the business owner is leading by example, making sure that we're communicating for expense reports, we need to have these receipts, we need to have this form filled out for you to get it back, and standing by that policy and that procedure, it helps set the tone and expectation for everybody else to be at those same standards.
Well, thank you so much, Vanessa. This is great insight for our audience.
You're welcome. I love talking about fraud anytime.
Vanessa, you've told us about some common myths, you've given us some real life examples, and you've given us some tools to help prevent fraud. Just bring it home for us about why preventing fraud is so important.
For a business owner, it's very costly. When we get down to the dollar figures, the ACFE puts out every 2 years a report. It's called Report to the Nations. And in that, they studied 1,321 cases. It was out of 138 countries. And they found that cumulative, that $3.1 billion was stolen from high execs or employees. But it was all of these cases, all of this money was stolen. And in some cases, they had internal controls, and in some cases, they didn't have internal controls. But it just goes to show you that if someone really wants to steal, they could bypass some of these internal controls that we've already talked about. Preventing fraud is extremely important to the business owner because at the end of the day, it's their money.
Thank you, Vanessa. This is great insight for our audience.
No problem. I love talking about fraud anytime.
Well, and it sounds like you love finding fraud as well.
Yes, I do. Do you know the next topic for your next episode?
Well, it depends.